Cool. All right, guys. So, yeah, let's get the stream started up. As always, again, the weekly streams, we're going to go over recapping the markets, showing you guys what I'm watching for next week, and some trade ideas we have for the upcoming week. And then I'll do a quick Q&A at the end if anyone has any questions on anything we went over. So as always, we'll start off with the markets, kind of look at the major indexes, see what the price action looked like last week, and then going into this week, what I'm expecting. So obviously we have NVIDIA earnings coming up on Wednesday. Gonna be, I mean, you can already tell how big that's gonna be, especially with the markets kind of on edge right now. And you know, the choppiness that we've had over the past few weeks. I think that's even going to exaggerate NVIDIA earnings even more. Whatever reaction we do get out of NVIDIA, that's probably going to catapult the market out of this range, I would say. Not for certain. Last earnings, we had a pretty flat move. So, you know, it could still be pretty choppy, and we could chop like this for another few months if that's where the market wants to go. But I think it should be a pretty good reaction to trade. As always, never try to predict what the reaction is going to be. That's going to be pretty unprofitable to do over a long period of time. However, if you look at the S&P, we can look at a few things, right? So what I always like to do is everyone's panicking here. There's always fear. You know, people are always looking at the smaller time frames, okay? Every time you're confused on what's happening on the bigger time frame, always zoom out, right? Always zoom out, start on the weekly time frame, get a little bit of clarity on what's going on, right? So now we can kind of zoom out a bit, see what's happening. So what happened last week? Well, we had a break of the previous all-time high. The stock market was not able to hold above the previous high, and now we put in a pretty bearish week on high volume. Obviously, we know we had OPEX on Friday, so usually we do have high volume on there. And then now we're retesting the weekly 8 EMA and the daily 50 EMA, right? So being short into the weekly 8 EMA and the daily 50 EMA is probably not the smartest idea right away. Why? Because this is usually a level that provides a pretty good support, right? You can see, I mean, the last few times we tested off this spot, we've bounced pretty nicely, right? Usually the 50 EMA is a pretty good support level. So after like a 3% drop from the highs, usually straight into the moving averages, buyers are going to get active here, right? However, this makes it for a very easy trading week for us. Why? Because if we break under the 50 next week, we have an easy short, right? I mean, the next support level would be the 100 EMA. So if you put on the 100 EMA, you can see that's where we bounced last time. There's pretty good room down to that spot. So like under the 50 down to the 100, that's about a 10-point drop, right? So that would be your target. That would line up right with this gap fill, and that would be a level to trade. So instead of just guessing what's going to happen, always have your key levels marked out. That's what I did on Friday, and that's why I was able to catch such a nice short in the market, right? So you can see how we dropped below this level right here. We reclaimed into the end of the day on Thursday, and then we broke the Thursday's low of day. And if you break that low of day, especially if you're breaking the key moving average, which was the 80 EMA, we know the next level is just clearly down here at the slow where we've been bouncing, right? So keep it level to level. That's how the market trades. It trades from one level to the other because that's where a lot of the orders are, right? A lot of the buy orders are at specific levels. People don't like, there's not just a bunch of orders that come out of thin air. A lot of times, price needs to come into a big level, right? And test that level before a reaction occurs. And this is the level that we're looking at now because this is where we bottomed a few times here back in on the 5th and then on the 12th as well as the 50 EMA. So that's just a big key spot. So have your levels marked out, right? So what we're looking for now is to see what ends up happening off the 50 EMA. So far, it seems like futures are bouncing just a little bit. But again, this was a very big drop, right? And futures are up maybe like 0.2 or 0.3 or maybe 0.4% or something. It's literally just right back here, right? So far, there's nothing really crazy happening, which is good. I prefer us to have a flat open and stuff and then see what ends up happening from there. If we bounce off this level, you have a very easy long to at least the 21 or the 80 EMA, right? So that'd be up to 604 and then 607, we could play a potential bounce trade. From here, you have to see, does the market make a lower high and then moves lower? Or does it bounce, reclaim the moving averages, and then get back to the highs, which is a possibility, right? We have to be open to either possibilities, and that's how you're gonna play this week. So If we bounce Monday morning, you have a pretty easy long idea to trade back up to 604. From there, I would probably be a little bit careful with longs, see what the moving averages do. If we reject the moving averages and make a new move down, that's an easy short as well, right? And then from there, you're just looking for a break under 590. That would be 598. And you would confirm that we're going to move lower, right? And from there, you have some pretty easy targets to look for. You have this trend line from this low that we held. And then you have the 100 EMA and the previous low, which would be right here. So at least you have a 10-point move to the downside. So those are the two things I'm watching for on the S&P. But again, always have your targets, always have the plan kind of out before the week starts. That way you are able to react and you're not looking to like just chase random levels. You know what you're looking at. So if you have this 599 level and we're down already like 10 points into that spot, there's a good chance the market might bounce because that's a pretty big downside move into a very key level, right? However, just because it bounces doesn't mean it's going to go back to the high, right? We need to see what ends up happening there. So don't try to predict what's going to happen. Wait for the reaction, and then from there we can get good trades on, and that's how you get good risk to reward on stuff. So that's what I'm looking at. If we can get a nice bounce, I'll be looking for potential long on overextended, stocks that are overextended to the downside for a potential bounce. If we do get below this the 600 like 598 level, then we could look to short it back down to 592. Overall, I wouldn't come into the week with a specific bias. We're still in range and we're still kind of tucked between the moving averages. So I mean, when you're choppy like this, you have to be open to trade either side, whether it be the downside on the follow through or be a potential bounce. Like you just have to be open. If we are in a trend to the downside, then that's when you would really start targeting these potential lower highs to short. That's what I would do. But since there's no real trend established yet, we're waiting for the market to show its hand. And then from there, we'll react, right? So again, 598 is going to be our key level. From the highs, 610 is going to be our key level as well. So those two spots. And then from there, I would watch the moving averages. A pretty good key retrace to look at is if you fib the high to the low, you wouldn't, if you're a bear, right? You don't want the market to get above the 618 retrace. If it stays under that, that's usually pretty bearish. So if we reclaim like 605 or 608 into next week, that's a pretty bullish sign, right? So that would be a good way to know if we're going to make new highs. If we don't reclaim, we're probably going to make new lows. But the market's just set up for a big move in general, in my opinion. We've had a pretty good amount of consolidation. I think a lot of it's going to come down to NVIDIA earnings. I don't think we're going to really see that huge of a move before then. I think everyone's really just anticipating those earnings, right? There's been a lot of doubt about AI. We've had the DeepSeek stuff. So we need some clarification on that. There's uncertainty in the market. So we need to see what ends up playing out. And we need some momentum because we've had so much chop recently. Every single new high has been getting sold. Every single new low has been getting bought. There hasn't really been that much of a trend in terms of follow through for a lot of stocks. So that's what I'm looking at for the S&P. For tech, you have a very clear trend line as well, right? So always, again, zoom out, see what the market's doing. On the on the weekly time frame, we made a new high last week, but we weren't able to hold above this week. We're coming back down to the 80 EMA on the weekly time frame, right? On the daily time frame, we have this trend line from the August low. We can connect these three spots right here, and it's very clear where the next support level is, right? We have this 50 EMA, we have the trend line, and we have this horizontal line right here, right? So where we bounced a few times. It's almost too clear at this point where the important level is, right? So what would you want to do? Well, if price comes into this low, we could look for potential dip buy, right? What you're looking for in a dip buy is you don't want to just randomly buy the dip into a key level because you have no confirmation that you're going to get a bounce, right? That's kind of like catching a falling knife. You could use a tactical reversal strategy like an RDR, which would be the market, for example, breaks under the previous day's low and then reclaims it to potentially get long tactically. That way you know that the bottom is more likely to hold and then you have a big move up. Or you could wait for like an hourly hammer to form with a lot of volume. There's things we could look for that are going to help us potentially catch a bottom versus just trying to chase, a falling knife potentially if that's where the market wants to go. Now, the next trade we have a potential for is a big short, right? If the market comes down here, it bounces a little bit, but it doesn't like fully hold up. It makes like a lower high and then moves down. forms a bear flag, you have an easy short. Why? Because you have 3 important levels that are coinciding right there. You have a ton of confluence right here. If the market breaks the 50, if it breaks this trend line and it breaks this horizontal spot, I mean, it's very clear we're going to make new lows, right? I mean, there's going to be a lot of supply that comes in, and then you have a few spots to look at. You have this gap to fill right here. You have this gap to fill. You have the election gap to fill. So there's just some downside ideas that we could take, right? So again, I don't want anyone coming into anything biased. Be open to trade either ways. We are at key levels, so it should be super simple. Just respect key levels. If the market is respecting the key level and bouncing, you're looking to trade with the market. If the market is rejecting that key level and price is breaking under, you're looking to trade under that spot and looking for momentum to the downside. It's pretty simple, right? You don't have to overcomplicate it. For me, what I really like to see for shorts though is a trend develop. So let's say, for example, next week we do break this spot right here. What I would like to see is a retest into that spot with the moving averages coming down, right? So you can see the 8, 21, and 50, and then acting as resistance and then make a new low, right? Because we really haven't been able to make any like trending lows lower. You can see where we made this new low right here. We actually reclaimed it the next day, and then that's why it started uptrending again, right? So usually a strong market, whenever it has any momentum, it'll usually break a high and then hold and then push higher, or it will break a low like this, hold and then push lower. However, the markets have been very trappy to both sides. They trap the shorts here, they trap the longs here because there's not a lot of follow through, right? That's what you're looking for in a strong trendy market. That's where you usually want to size up. So we can look to trade either way. I would recommend waiting for the reaction. These are my key levels that I'm watching. 522 is going to be super important on QQQ. Use the moving averages and this trend line right here. That's a ton of confluence. The more confluence a level has, the better it's going to be and the easier it's going to make it to trade around that level, because if price breaks that spot, you have a very high conviction short idea, or if price holds that level, you have a very high conviction long idea, and you're waiting for volume to confirm. That's the biggest thing. What was the difference between Thursday's price action and today's price action? It was all the volume. If you look at the difference on, let's say, like the 15-minute time frame on tech, for example, look at the volume when we broke this level right here on tech compared to yesterday on, or sorry, this was Thursday on QQQ, right? Almost no volume. It broke a little bit here in the morning on a bit of volume, but then since then it just completely faded. But look at the difference in the volume on Friday. Look at how much volume was there like the whole day, right? As the stock market was pulling back, there was a ton of volume, and now it's confirming to you that the market's going to move lower, right? You can see like there's a huge difference. There's only a lot of volume at the open and close on Thursday. On Friday, there's a ton of volume at the open, ton of volume during lunch, and a ton of volume at close, which is usually something you don't see much. Usually the volume's super high at the open, super high at the close. But when there's a ton of volume at lunch, that really tells you there's an anomaly here. And this is where your confidence should be to short or long, right? Volume is going to confirm everything. So if there's a ton of volume on a break of a level, that confirms to you that price is going to move in that direction of the break. Obviously, again, no strategy is ever going to be perfect. This is just a confirmation you use, but never going to be 100%. But this is something we could look for to make our confidence and conviction higher. That way we can execute more easily, which is what we want to do at the end of the day. So that's the idea there on tech for me. I would mark out these levels. Something that really helped me out on last week is just marking out the levels, right? Like when I went on the Qs, I just simply marked out the previous day's low, which was 532.5. And I put an alert for myself like this. I put market has to hold or short. And like you literally get a pop right here on your screen on TradingView, tells you exactly what you have to do, right? So mark out your levels. It helps you get like an idea of what the market is doing. And then when the market's breaking down, you can look for weaker individual stocks to short. For example, Tesla was a beautiful short on Friday. It was a weaker stock for the last like month or two. And it was in a clear bear flag, right? It was rejecting to get higher. It had the ADMA and the 21 and the 50 above price, which means it's in a downtrend. And it was just a very easy short on Friday, in my opinion. Same thing with MSTR. This is another one I shorted right here. See, I mean, it was very easy. Like you don't want to overcomplicate stuff. This was in a big like base, right? It was kind of consolidating at the lows below all the moving averages. That's the key, right? If stocks are below the moving averages, but the market's above, those are weaker stocks. So we always want to short the weakest stocks, because look at how much Master ends up being down on the day, 7.5%, right? So obviously we could just short the market, but I mean, a 7.5% move to the downside is much better than a 2% move, to me at least. I mean, you're getting a bigger like bang for your buck and more opportunity cost if you're shorting individual stocks that are already weak. Same thing with Tesla. You can see Tesla was down 5% when the market was down 2%, right? So it's obviously going to be a better short if you caught the whole move. So that's what I looked at for MSTR. It broke this low right here, and then it just, it made a big move to the downside because the market was breaking down. So always have your levels alerted at, like have an alert for them. And then whenever, the stock hits that level, you have an easy entry and you don't have to guess where to enter. You enter at the break of the structure, the break of the whatever you're looking at for your base, right? So this is a big base, kind of like a pennant base. It's below all the moving averages. We take the most recent low. That's going to be our trigger. If it breaks that low, we have an easy short down. Volume confirms. Again, look at the 15-minute on MSTR. When it broke the this level right here, look at how much volume came in. And that's around midday, right? That's abnormal. Usually high volume you'll see during the open and the close. But when you see midday high volume, that's usually a very good indication of a ton of orders that come in, which will usually confirm your breakout or your breakdown, depending on which way the market's moving. Next, we'll get into IWM really quickly. This was an amazing downside move, obviously. It was clear that this is a bear flag, right, on the daily time frame. Kind of like a rising wedge bear flag that played out here. Couldn't get enough strength. You could see the volume pattern, super bearish. For this one, it's already down 3%. I would be a little bit careful at this point trying to short it near the low. However, if this is developing a downside trend, which it's in right now, right? I mean, if a stock makes a new low and then it makes a higher low, and now it's in a downtrend, right? So it's moving like this. So if this is going to continue to move lower, what will happen is it'll break the 200 EMA, right? So you could see the 200-day has held on IWM since like November 2023, right? So it's a long time. So if it breaks under, what do we expect to happen? I mean, this is a very easy short, right? So IWM could be a great short, or it could be a great long, right? Because it's held the 200 so many times. This is already going to be the 4th test and the 3rd time that it's held. So if it holds here, then we could look for a long, but we're at a very key level. So I always say key levels make for amazing trades because it goes either way very quickly, right? You either get a big bounce right away or you get an easy short down. What I usually would do is I don't like to short the lows, meaning, for example, if you have a big move down, I wouldn't like to short here because you're already down 3% from this level, right? What I like to see is the market bounce a little bit, then the moving averages will catch up from the upside, bring down more sellers, and then break the low, right? So instead of just going straight down, we want to see consolidation and then break under. That's what I would be looking for at this. But IWM could be a great trade. So my eyes are going to be peeled on this for the rest of the week, just to see if we bounce here off the 200 or if we get a break under. If we get a break under, I think IWM as an index could be a great short because we have a big, spot down at like 207. That's potentially, that could potentially come on this breakdown. So I'll be watching this one, but it's always good to get an idea of what these sectors are doing in the overall indices, right? We want to know what the overall like sectors and stuff are doing. So IWM is obviously the Russell, it's small cap stocks. Small cap stocks are usually going to be stocks that are a little bit more risk on. And it seems like right now the risk on environment is pretty bearish. Like a lot of stocks that are risk on are getting beaten up pretty badly. ARK was very strong like 2 or 3 weeks ago, and then since this whole week it was just so weak, right? A lot of people sold at the highs. Stuff like Palantir, stuff like Square, XYZ, all those names sold off. So obviously that's going to put a lot of pressure on some of these growth stocks. Let's get to Dow really quickly, and then I'll go back to ARK. The Dow broke under this kind of pennant that I was putting in as well. And we also saw this from banks, right? Remember, look at XLF. Banks were very strong over the last 3 weeks. I mean, we were making new highs. It pulled in. We made new highs. It pulled in. We made new highs. We just haven't really been able to get through that spot, right? In the last 2 days, sold off on a ton of volume. So always watch these sectors to give you an idea of what the market's going to do. When banks are leading and are strong, usually that's a great indicator of strength. If banks are moving down, that's usually a pretty good indicator of weakness. So if financials are, leading the downside, that's not a really good sign. we usually want financials to be pretty strong. So XLF so far looks pretty weak. The Dow also is on the weaker side. We broke under the 50 EMA. The 100 would be the next spot to watch. But if the market's really going to accelerate a downside move here, you're going to see all the sectors move lower together, right? Because it's been a lot of rotation recently between sector to sector to sector. A lot of sectors were holding up. A lot of sectors were, losing steam. We had software stocks strong. We had AI stocks strong. And then it kind of moved, the rotation kind of moved into like banks, industrials. We had, a little bit of a theme. We still have a little bit of a theme in China stocks. So it's kind of been money flowing around. But overall, last week was a pretty big decline on a lot of stocks, which is something you want to know, right? When that happens, that usually means a pretty big downside move can potentially occur if sellers do press. So that's something to watch for. Again, you don't want to be shorting the lows. On something like ARK, where it has moved, I really want everyone to be super rational with your thinking, okay? The same thing happened last time, right? We had FOMC right here. So if you look at ARK, this is Wednesday 18th on FOMC right here. We had a huge move down, right? The next day was kind of flat, but it was still weaker. And then the next day gaps below the previous day's low. People are shorting here for some reason. After the stock, the stock's literally down 5 to 10%. Within 3 days, right? This is where everyone gets trapped and moves up. And then this is where, sellers come back in, because the thing is, smart money is always going to be patient. The thing that happens with retail traders and people who fail at trading is they're very impatient. They try to short the lows. They try to chase the tops, right? Have a reason behind these moves that are occurring, right? If you're coming into a huge level where price is held multiple times, in a key moving average, right? Are we really going to go lower here, or do we have much risk to reward to go lower? Maybe we do. Maybe it does pull in a little bit, but the risk to reward, is that something that's really great? Not really. What you're looking for in this scenario is a bounce, right? A retrace of the move. This will trap longs, right? And it'll also get a lot of sellers back involved at the moving averages. And that's where the next leg comes. So you want to sell kind of the rips in a downtrend. Don't try to short into support, right? If price breaks support, that's a whole totally different story. Then we get a very nice move under that level. But be a little bit careful with that. Have intention behind the trades that you're taking. That's what I'm trying to really portray here. And that's the same thing I said when we were up here on tech, right? I was saying, be a little bit careful. We literally came all the way from this low at 499 to 534, right? And a lot of people were trying to get long up here. What are you longing up here? I mean, this is a straight line into resistance, right? Wait for the EMA pullback, buy the 50-day right here. But what ends up happening is everyone gets short here on the deep seat stuff, and the market just keeps, just playing with you mentally, because that's what markets do, right? In these type of periods of time, trading is hard, right? The markets are trying to shake out a bunch of traders. That's what the markets are doing. There's a lot of shakeouts. There's a lot of, money being rotated from different companies and different things like that. There's no real theme going around. And this is when markets are hard to trade. But you have to be a little bit smart when it comes down to this. You have to understand where are the key spots to look at. Why am I just shorting a random low, right? Should I wait for something to happen? Yeah, you should wait for a break below that low with a ton of volume. That will confirm. You should wait for a break below the moving averages. You shouldn't short into the moving averages. So have a little bit of sense when it comes to that. This was a beautiful move to the downside. Why? Because it was a failed breakout, right? And this is how the market's been moving recently. If you've noticed, or if you've seen how this chop has worked, this is a failed breakdown right here, right? The market traps, moves the other way. This is a failed breakout right here. Market traps, move the other way. Now it bounces off support because this is a big level. Now right here, fails to break out. This could have, by all means been a beautiful breakout, and it would have moved higher. And I honestly wouldn't mind trying to trade this to the upside. But the moment you see that it doesn't hold key levels, it's clearly going to go the other way because it's not holding a key level. So we have to understand what's happening and be a little bit more fluid in terms of looking at the markets and not being so biased all the time. Just see what the market's doing, let the price action tell you what's going on, and then from there we can make informed decisions. So what I'm watching for is ARK, again, could bounce off this spot because it's a key level. This is a lot of selling into a very key spot. Smart money might try to, buy this up a little bit, or there might be a little bit of a bounce because people are chasing into the lows, or it could completely flush the spot, right? I'm not a a market wizard. I don't have like a crystal ball. I can't tell you exactly what's going to happen, but I'm going to make an informed decision based on what's going to happen versus trying to guess. So if we get a little bounce and a break under, I'm shorting that. If we get a bounce and it looks like we make a higher low and we hold and move higher, that's something we could long, right? So there's different scenarios we could take. We need to let the market confirm on a Monday, usually, especially after a big move like this. I'm just a little bit cautious. I'm seeing what the market's showing me, right? I'm not going to be too eager to really jump straight into something because we could get a lot of traps either side. So that's what I'd be watching for. Watch the key levels, see how the markets react off that spot, see where the volume is coming out. Do we have a ton of volume as we reclaim the level? That's going to tell you that buyers maybe want to move things to the upside. Are we going to have a ton of volume losing that level? If that's the case, that tells you we could look to aggressively take things to the downside. So always be open-minded, look for those things to play out, key levels, mark those out, have alerts. That's the smart way to trade. All right, so now I'm going to show you guys a few sectors, a few stocks that I'm watching in terms of the specific names. Firstly, I'm going to go over the position I have. I just have MSTR short going into next week. My stops are break even on this one just because of the fact that, I mean, it's a it's a swing that I'm super deep in profit in. It's about like 100% up. We'll see what ends up playing out, right? Market's bouncing a little bit. Maybe it bounces, right? We'll see what ends up happening. I'm just going to hold it with the break-even stop. What could happen is it could retest this and it could be a nice add, right, to the short. So what I'll be doing is rolling over the contracts if that's the case. I think overall MSTR looks very bearish. The only way this really reverses hard is if Bitcoin moves. But I mean, if you look at the chart on Bitcoin, even with the little bounce that it is putting in right now, I mean, it's pretty bearish. Like the highs here were swept and then it came down and now it's like, it's been consolidating near the lows. This looks a little bit like a bear flag to me. I mean, it doesn't necessarily have to come down, but I mean, from what I'm seeing in the price action, it looks pretty bearish. I mean, we've been consolidating under the moving averages, right? So I think MSTR coin and a bunch of crypto stuff is a good short. I'm not saying necessarily I'm super bearish crypto in the long run. Just right now, the way things are looking, like the short to midterm, look pretty bearish to me. So I would say this is a good bearish potential for a trade downside. If you're not in MSTR, again, I probably wouldn't short the lows. What I'd look for is a retest. Look for a retest at like 308, 310. Look for price to reject. Look for the moving averages to come down. And I mean, if you see this chart, it's very similar to Tesla before Tesla broke down. I mean, if you look at the chart, it's almost identical, just more consolidation. And what do we know that consolidation causes? Causes big moves, right? We get huge moves after consolidation. So I think MSTR would be a really good short. These are the types of stocks that I'd be shorting right now. Stuff that's under the moving averages. Stuff that's been underperforming, right? The S&P is trading somewhere up here. Look at where MSTR is trading. So if you compare it to the S&P is only down a little bit off the high, but MSTR is all the way down here. That's a stock you want to look to short because it's weak, right? Same thing with Tesla. The S&P is trading somewhere up here. And Tesla's not even close, right? So it's clearly relative weakness. And that's why it was a nice one to short on Friday. So look for relatively weak stocks. I'll give you guys a few examples. Google's another one, right? This came off a big gap down on earnings. This is a very good reason to short this stock because it's off an ignition candle to the downside. It's breaking the key moving averages. You could see on Friday, why was this one such a great short? Because it had a little perfect bear flag into the ADMA, right? So these are the types of setups I would like to look for. Same thing with Amazon, right? This is one that I was looking at to the downside as well. It broke under this 224 level, and then it got a nice move down here to like 216. So these are the type of stocks that I like to look for to the downside. Something like Apple, for example, completely different. Like, why didn't Apple really break down on Friday? Because it's been the strongest stock in the market, or in FANG stocks, right? Like, it's above all the moving averages. This is not something we want to short. We don't want to just time the top on this. What we want to do is trade the momentum. And this one's clearly a strong stock above the moving averages. It's had momentum. I don't know whether it's due to news or whatever. It just has momentum, right? And you don't want to fight that. So as long as you see momentum, no reason to fight it. If there is follow through, this one will break through the moving averages and then it will develop a trend. But those are that type of things you look for. In terms of my focus list, guys, what I'm watching for is a few different stuff. So I have a few long ideas and I have a few short ideas because, again, I said I'm open to either side, especially after a big move into the end of the week. Market can go either way. So if it bounces, I want to know which are the strongest stocks. If it's weak, I want to know which are the weak stocks so I can look to trade them to the downside. So for my longs, what I'm looking for is China. There's been a specific theme in China stocks. They've been super strong. BABA has been leading them higher after a great ER, after a partnership with Apple, right? There's been a lot of great things for China. There's been stimulus. Obviously, we did have a little bit of a scare with the COVID stuff coming out of China. We'll see how that headline develops. I doubt there's really going to be any lockdowns or anything like that again, but maybe there will be, right? So never know. So be on the lookout for that headline. Other than that, though, the way China has held up, even with the US market selling off, I think is pretty strong. So I would be looking for China to continue higher, right? But I'm not looking at something like BABA. Reason why is because BABA is so extended. I mean, this stock is up like from 83 to 143 in like 2-3 weeks. If BABA comes down and retests, that's what I would look for. But at this point, it's too extended for me to trade it. If it sets up, it's the moving averages or something, I like it. But look at JD. This is a stock that hasn't really, it's been strong, but it hasn't really done much over the last week or so, right? It's just kind of been in the space. Why? It probably wasn't ready to move higher, and it had a huge resistance level right here. So what are we looking for on JD? Well, we're just looking for a reclaim of this resistance level. So my trigger level for this would be this level right here, which is 42.64 or 65. If it breaks above 42.65 with volume, I'm longing this, setting my stop at previous day's low, which is 41.66. And I think this should be a great long, right? Look at the weekly chart on it. Let's look at it really quickly. Setting up in a huge weekly base, it has these lower highs. It just broke out right here with a ton of volume. It set up another wedge that it's breaking out of with a ton of volume. And on the weekly overall, you could see it's actually been pretty tight. Like it's had like 5 weeks of consolidation, which is exactly what you want to see. You don't want to trade stocks that are too overextended. You don't want to trade stocks that are too oversold. You want stocks that are coming out of consolidation because that's when the biggest moves happen, right? Something like BABA, for example, the reason why it ran so much is because it had a ton of weekly consolidation. Look at how much this stock has been consolidating. And then it broke out of this really big flag, right? These are the types of moves we're looking for. So I really like JD. This is a good China stock to trade, in my opinion. I think over that spot can move higher. It does have earnings in the next 2 weeks, but I think you can play a little bit of a run up into earnings. Another China stock that I like is PDD. This one, again, hasn't really moved that much. It is strong, but it hasn't moved like the most yet. And I think there's a ton of upside still left because if you look at the weekly chart, there really isn't a ton of resistance until this high. This is the biggest level for PDD recently. There really isn't a lot of resistance between this spot and this spot. So I think it can run up to 150. It's been strong on the daily time frame. Look at the volume patterns. They've been pretty healthy. So what I'm looking for on this one, it just broke out of this space right here. It's just now breaking out of this spot. So what we look for is go on the smaller time frames and then look for a break over the previous day's high. Over 133, especially if you could set up like an opening range like that and then break out, that's something I would trade, right? So PDD and JD, I like for the upside. Those two look pretty good to me. The 2 more trades that I really like to the upside that I have high conviction in. APLD, I tried this one on Friday. Obviously, the market wasn't strong enough to get going on this one, but it still closed the day green, right? I know there's a long wick. It's pretty scary. Obviously, not the most beautiful close you can ask for. However, it's a strong stock. And I could tell by the fact that even after hours, even with the market being weaker, it bounced a little bit as well. So after hours, it was like 10.76. I think it's still a stock that wants to break out. The way this has been acting has been super strong. Look at the weekly time frame. I mean, it's just absurd, right? So for this one, you'd want it to get back over 11.8, I would say, sorry, 11.2. So we can see that on the smaller time frames and then kind of break out of this 15-minute wedge, right? That would confirm to you a trade on it. I would say this one would be more so for a day trade because a lot of these long setups have been pretty weak in terms of follow through. So you can see this one, same thing, it kind of bounced, but then didn't really get much follow through and then it kind of died with the rest of the market. But it still looks phenomenal. So I would watch this one. Break over 11.2 would be my trigger for this. So if it breaks that, reclaims that level, the weekly just looks insane. Like there's so much room for this to run on the weekly up to like 17, 15, maybe even 25 if it gets up there. So it's a great stock. Watch it with NVIDIA earnings because NVIDIA does own some stock, some shares in this. So that could be one to look for. But I would definitely say that, this was one of the strongest stocks in the market over the last 2 weeks. So if the market's going to bounce, this is probably going to be the first one to see strength. The next stock that I like for potential upside move is DE. Again, similar to the rest of the stocks that I've been talking about, you can clearly see how strong these names have been, right? And the reason why I'm focusing on strong names is because if these stocks were strong when the market's weak, what do you expect them to do when the market's strong, right? 99% of the time, these are stocks that are going to lead the markets higher and show you a lot of strength. So we know that DE is an industrial stock. So what would we be looking for? A bounce on the Dow, industrials, right? If you look at DE overall, it had earnings, which is really good, right? It had great reaction to that. It got back through this flag and it's been pulling back on almost no volume, which is exactly what you want to see. So Had a ton of volume as it moved up, low volume as it pulled in, set up a beautiful flag. It's retesting the previous high. This is a great idea for a potential long. What I would be looking for is maybe a little bit more consolidation, and then we could look to take this one to the upside. So another really great chart in my opinion. I think these three, JD, APLD, and D would be like the best longs. If the market bounces, again, I want to be looking at the strongest stocks in the market. So these would be the ones I like to the upside. Now for the downside, I'm looking at a few names. Obviously, MSTR is another one I'm watching. I'm already in some for that, but we can add more. The next one I'd be watching is ALAB. Reason why? It's literally the same exact concept I was talking about for the long side to the downside, right? This is a stock that's been downtrending even though the market has been moving up, right? Over the past 3 weeks, the market's been moving up. This one's been downtrending. Why? Because it's a weaker stock and it had pretty bad reaction to earnings. And it's been just a weaker name. It's below all the moving averages, and it has a clear bearish setup. Like it has a clear, like this is, like either like a rising wedge or some sort of bear flag that's forming here, especially on like the weekly time frame. You can kind of see it really well. Also, it has a very, very key level that it's trading at. This is where it broke out after the IPO. And this is where the big move occurred, right? And you could see buyers have really been trying to hold the spot. But the longer price consolidates near the lows, the more likely it is to break down. So for something like this, I'd be looking for a break under that level. I think this is an easy short under like $83. So that's what I'd be looking for on ALAB. The only thing you want to see is a ton of volume, right? It didn't have that much volume on Thursday or on Wednesday, Thursday, and Friday. So I want to see a ton of volume, something like this, right? If we see volume like that, that could really confirm weakness on this stock. So that's something I'd be looking for on ALAB to the downside, but it's been a weaker stock. So I think it's a really good short. Semiconductors have also been weaker. Obviously, again, if you're trading a semiconductor stock this week, please watch NVIDIA. The reaction is obviously going to be very important. Could either, boost semis up or we can go to the downside. On Tesla, I'm still watching this one for a short. Why? It's been literally the weakest stock in the market over the last few weeks. I mean, you just continue to trade the weakest stocks until they start to reverse, right? Same way that I was trading Tesla to the upside when it was in one of the strongest stocks in the market, I'm going to trade it to the downside while it's the weakest stock in the market. No matter my thoughts on Tesla, doesn't matter if I love Elon, doesn't matter if I love the company, you have to take out all bias, trade the chart, right? To me, the chart's just pretty bearish. I mean, there's nothing else on this, right? It can reverse to the upside, sure, but you need to see things that confirm that. It needs to break at least 370 for me to even want to consider this as a potential reversal. So for now, it's still in a bearish trend. You can see it's making lower highs, right? It's making new lows. Well, it hasn't made a new low yet, but it looks like it's going to move that direction. So we want to look for continuation to the downside. So what I would watch for this week is a break under 325. If it breaks under 325, I think this is coming to at least 310 and 300, right? If it starts to come down around this level at like 272, I think this is where we start looking to buy it, right? I mean, this is a very big spot. That's where I'd probably look to buy Tesla. But at this point, I don't think there's a reversal here yet. Maybe it could be, but I would have to wait for signs to show me that the reversal is coming. But I'd look to short it under 325. So ALAB, Tesla would be some of my favorite shorts. I think those look good for the downside. If the market's weak, so like the moment the S&P breaks 598, I'm looking at ALAB, I'm looking at Tesla to short. I might even be looking at the S&P if that's an easy trade with like easy levels to trade. Why not, right? You could take downside on that. Those will be my two downside ideas. Google, Amazon, some more names you could look to the downside because those have been weak. But I recommend you scanning tonight, see which stocks have been weak, see which stocks have yet to break down. So for example, something like ALAB has been weak, but it's not really breaking out of that range yet, right? Like it still has a nice range to trade. So if it breaks down, you have an easy downside move that you could take advantage of. A few more ideas that I'm looking at for some names. TME is another China stock that's really strong. I'm watching this one for a potential long. This could be really nice up to like $16. On this one, if it stays above like $14, we can look to trade it up to 15. You guys can see, I mean, what I'm focusing on is China to the long side, tech to the short side pretty much. Obviously, we can bounce a little bit on tech. We can pull back a little bit on China. That doesn't change the overall trend, which has been China long, tech downside, right? That's kind of how the flows have been in the market recently. Yes, they could change. NVIDIA could change a lot of it. So that's what we'll be watching for. But overall, I think that's how the markets are moving. If tech does bounce, I have a few ideas for a bounce on tech, right? I'm looking at LRCX. I like the way that this one is holding above the previous high. And also remember, look at the market. It's below the 821 EMAs. If your stock that you're looking at, so for example, APLD is above the 821.50, Overall, that's how you know the stock is strong, right? You don't have to overcomplicate it. If the stock is trading above the moving averages, but the market is below, that's a strong stock. If the stock that you're looking at is trading below all the moving averages and the stock market's not below the moving averages, that's a weak stock. That's how you know if a stock is weak or if a stock is strong, right? So on LRCX, we traded this one here. It didn't get much follow through. We got a nice trade on it. But overall, you could see it's retesting and holding above the base, and it's above the moving average still. So if the market's all the way below the 21-day, theoretically, the stock should be here, right? But since it's a bit relatively strong, it's still at the 80 EMA. So we can look to trade this for a bounce idea. If the market does bounce off the 50 EMA here, these are the stocks that I want to be long, the stocks that have been strong, right? Same thing with QBTS. I think this one was a very strong one. Ideally, I would have loved to continue to hold a position in this one. So we were long this on Thursday, took profits on Friday. Obviously, it came back down, right? That's kind of been the theme of the market. We've had a lot of great trades, just not a lot of follow through, right? Which is fine. You have to understand that's part of the market. You don't want to just continue to hold just because you think the stocks can go up, but then it comes down. What I like to do is at least trim a little bit of profits. That way you secure profits. And then if the market comes down, the market comes down. If it falls through, it falls through. But we stick to a rule system that makes us manage our risk correctly, right? So if this is going to keep going higher, it'll very clearly hold at the $7 level. The moving averages are going to come up. If the market bounces, I'll just get back in this. I don't mind, right? If it's a strong stock and it's going to move higher, it's going to show us signs that it's going to do that. Same thing with TTWO. I think this one's still great. Again, look at the market, broke down with a ton of volume. Look at TTWO, right? I mean, it obviously was red because the market was red. It'd be very hard for a stock to be green during the market weakness. But look at the difference in strength. I mean, it's not even close to the 21-day. It's still above the 8-day, and it had no volume on the sell-off, right? So again, these are the types of stocks that I would look for to the long side. Things that have been holding up well. If the market does bounce, these are the ones I want to look for to the upside. A few other names that I like. Unity is another strong one. I think this one could be moving really well. Again, green while the market's been red, right? So we can watch this one for some strength. It's above the weekly moving averages. ASTS is another one. For me, this could be a potential great dip buy. I missed this original move right here with options, but I think it's going to come down and give us an entry. I like around $27. You can see that's where we bounced last time to make new highs. But even it can come down to like 25, I would definitely take it. If you look at the weekly time frame, the retest level lines up at about like 25 bucks, right? Because that's like about where the trend line is right here, where the weekly moving averages are. That's where I look to buy it. So ASTS is like my number one dip buy. I would recommend everyone to, get an idea on what stocks they want to dip buy. And I would recommend to do the stocks that have been strong, right? So stocks like, for example, something like Palantir, right? Doesn't look the greatest right now, but look at the volume patterns, right? So even though there was a ton of selling here, the buying was on way more volume, right? So it made a new low, but then it got kind of popped back up. On Friday, it basically had half the volume that it had this day. So in my opinion, something like this would be a good dip buy. Obviously, I'm not looking to buy it out of thin air. I would be looking at key levels, but something like around $100 would be the first spot, or even like $85 if it comes down in there, somewhere around the 50. That's something I would look to buy. So make a list of stocks that you'd be interested to buy the dip on. Obviously, don't buy the dip just to buy the dip. Wait for the market to tell you if we're going to get a bounce. Wait to see if there's buyers that come in off those spots. Look for a hammer, things that give us indication. But those are the types of stocks I would look at. Another one, SMCI. Look at this name. It's been up like from 27 to 65. This could have easily been down like 20% on Friday, right? But it really only pulled back to around yesterday's or the previous day's close, which was Thursday. So stock that's this strong, it's pulling into to retest the breakout. In my opinion, this is a long, like a long any day. Obviously, we have to see what the market does. If the market holds up, this could be a great long. So this is something that I'll look for. Another one would actually be INTC, Intel, right? Look at how much the stock has moved from the low. Everyone was FOMOing it here on this day, but no one wants to buy back into the moving averages. Why? I don't know. That's market psychology, right? So these would be the spots to look to buy these names, especially. Look, guys, look at the volume. Like, you have to look at the volume. It tells you the story. Look at how much volume it had on this day right here when it moved up. Look at how much volume it has here. Institutions are not selling, right? There's no institutional selling. This is just a normal market move because the market was down 2%. So it makes sense that a higher beta stock would be down 4% because the market's down 2%, right? So these would be the stocks that we want to buy. Things that pulled in on low volume. Now, we don't want to buy something like Google, because look at the volume, right? This is selling. This is a lot of selling. Look at the volume on the buys. There was no volume, so institutions are not buying this stuff. A ton of volume here on the sell, a ton of volume here on the sell, right? So look at the volume. It gives us a little bit of a clue on what's happening. And from there, you can get an idea. Same thing with MSTR. Look at the volume, right? A ton of volume on the sell side. There's been virtually zero volume on the buy side on this one. Until you see that, that is something that's telling you that this is going to be a good downside trade or a good downside move that can continue higher, right? So that's how you would differentiate between a good dip buy and a stock that's clearly getting sold off with a ton of volume. The volume is going to be some of the most important part to look for. So that's what I look for. That's what I'm watching. Same thing, look at JD, right? This one was green, ton of volume as it was moving up into the new highs. So that's something that I would look at. So yeah, hopefully that makes sense, guys. If you have any questions on anything I said, you guys can go ahead and ask me. But yeah, that would pretty much be my plan. I'm keeping it very, very focused early in the week. I'm not looking at too much stuff. For me, China long, A-Lab, Tesla, semiconductor short. We'll see how NVIDIA earnings plays out. I don't think holding anything into NVIDIA is a very smart idea. You'll see what plays out. If it's a great reaction, great. If it's a bad reaction, we can see what ends up happening in the market. So we can trade depending on what ends up happening. Have a few stocks you like for the downside. Have a few stocks you like for a potential dip buy if the market does give you that. And then from there, watch the levels. I think that's the best way to be unbiased in the market. Play either direction. At the end of the day, the market gives opportunities no matter where it goes. So we always have something to trade. Just be smart about it, as I mentioned. So yeah, guys, if you have any questions, let me know. I'll be going over